this shift in position a sign that actually investors are preparing for a new reality?
Well, there was certainly a really large buildup of short volatility positions. So this is a little bit healthy that we're seeing a move away from this. I mean, it's quite shocking when you look at how drastic this move is. I mean, the most record net longs that we've seen, most of that is driven from a reduction in short positions. But there was so much money behind those short positions, which really got burned last week. Because when you think about it, that is the trade that had been essentially minting money for the past few years. Volatility has been so breathtakingly low. And now it seems investors, perhaps some just because of the damage they sustained, needed to take off those positions. But also as we get more inflation data rolling in, as we see some weakness in credit markets, there certainly are signs that perhaps this facade of stability has cracks in it, and we could expect more volatility to come.
So, Dani, in our reporting, have we figured out exactly who are the winners and losers in the correction, if you want to call it that, last week?
Sure. Well, certainly people who are holding the VIX ETPs, definitely a loser in this situation. But I actually spoke to a hedge fund based in Denver, and this was more of a joy to report.
That was a great story.
Thank you. Well, it was great to report because we've talking to so many investors who really were hurt by the blow of the ETP. So it was a nice change of pace to talk to someone. So they had a put on SVXY, one of the short volatility ETFs, netted a $17.5 million gain from a $200,000 bet on that put. So that certainly treated them well. But if anything, that shows that warning signs had been out there. Whether investors were willing to listen to it, though, was a different story.
Yeah, and that's often the case, which is why we often talk about the canary in the coal mine. But actually, Andrew, what will this week bring? A lot of people called the end of the volatility on Wednesday, and then on Thursday it tanked again. And so people are a lot more cautious, also seeing whether this infects other markets.
Yeah. Well, look, I think actually it's important to step back and say that the move we've had so far is actually similar to a number of the sharp drawdowns we've had in this bull market. Initial sharp drop, a retest, we had that at the end of last week. Volatility peaking relatively early on in that correction process while markets remain volatile, and I think we're still on track for that. I think, you know, what's interesting is at the end of last week, you finally had some of these other lagging asset classes finally catch up. But their repricing also matters. In credit indices, you're now back to closer to the one-year wides. Same story in emerging market credit. So, you know, a number of these asset classes have repriced. And I think that kind of puts us in a healthier place to find a base and ultimately to move higher.